Welcome to our webcast. I'm Jessica Leventhal, CEO of Precious Metals Summit. On behalf of the Precious Metals Summit team, I'm happy to extend a warm welcome to our panelists and viewers this morning. It's a great pleasure to collaborate with VRIFY on this virtual panel, which is taking place just about 2 weeks in advance of the 2024 Zurich Precious Metals Summit. It's always a pleasure to collaborate with VRIFY, one of our important conference sponsors on these annual webcasts. Today's discussion is called A New Era for Mining and Metals, Navigating the Future of Resource Investing in an AI-Driven World. Steve DeYoung, CEO and co-founder of VRIFY, will be digging into this topic along with our 3 expert panelists. They are Grant Williams, author and publisher of Things That Make You Go, and host of the Grant Williams podcast, Ashton Scordo, Director, BC Investment Management Corporation, and James Holman, Portfolio Manager, Merk Investments. Thank you all for joining us. And now over to you, Steve, on with the show.
Hey, thanks, Jessica. And looks like we've got Serena joining as well. Okay, thanks so much. Always a pleasure to do these with you and Misha. I'll run through a few introductions really quickly here, and then we'll kick it off. Thanks everyone for joining. Start with Grant Williams. As you mentioned, Grant Williams is the author and publisher of Things That Make You Go, and host of the Grant Williams podcast. He's also one of the co-founders of Real Vision Group. Grant spent over 35 years in finance in a variety of global financial centers, building the kind of network that many others can only dream about. Currently, he's a senior advisor to Matterhorn Asset Management in Switzerland and a portfolio and strategy advisor to Vulpes Investment Management in Singapore. Grant's twin Real Vision interview series, In Conversation With and On the Road, raised the bar for financial content. His new series of video conversations, About Time, continues the legacy. Grant, thanks for taking the time to join us today.
Thanks, Steve. Thanks for having me, and thanks to Jessica and Misha too.
We've also got Ashton Scordo here. Ashton is not a commodities person. Ashton joined BCI, so British Columbia. What is that? Is it just investment? BCI Investment?
British Columbia Investments.
British Columbia Investments. It's a Canadian pension fund. In 2016, and now co-leads the venture and growth equity portfolio, focusing on strategic partnerships and investments in growth stage companies. Previously, he worked on various software and technology investments with private equity. He serves as a board observer for Photonic, Verifone Payment Terminals, and Relations. BC's private equity program with $30.7 billion in assets is a significant contributor to BCI's $250 billion in assets under management, making it one of Canada's largest institutional investors. Ashton obtained his chartered professional accountant designation at Deloitte, where he focused on M&A and corporate finance. Ashton holds a master's in professional accounting and finance from the University of Saskatchewan, a Bachelor of Arts in political science from the University of Victoria. And Ashton felt it important for everyone watching today to know this as well. Ashton played semi-professional hockey growing up and has an official record of 3 fights and 3 losses. Jamie, who did not send me a bio ahead of time. I've known Jamie for years in the sector, but I'm actually going to get Jamie. I'm going to let Jamie introduce himself here.
Yeah, giving my bio. So I've been beating my head against a wall in this sector for way too long, for like the last 15 years. I started with Oppenheimer, which then went into Invesco, and I was on the Oppenheimer Gold and Special Minerals Fund there as an analyst for, 11 years. I have a background in mineral economics, geology, some mining engineering. And then about 2.5 years ago, I joined the ASA Precious Metal Fund as the portfolio manager with Peter Militis, and have been running that. It's been a lot of fun. So we're I went from being very much large cap focused to more smaller cap venture investing focused.
Okay, thanks, Jamie. So a big thanks to the 3 of you for doing this today. The purpose of this conversation is just to not just talk about mining, metals, commodity prices, kind of where the market's at, things like that. Obviously, we'll get into that as well. But we're going to continue to have a series of conversations at VRIFY, really around just AI and the impact that can have. And the reason I wanted to get the three of you on this is it's a bit of a diverse group looking at this from different angles. Like Ashton doesn't spend a ton of time looking at mining investments, but is seeing a lot of technology companies, and not just technology companies that use AI, just other technology companies. Sorry, not technology companies that are creating AI products. Technologies, it's just another sector that's actually just being disrupted by AI and how they develop their existing products and so on. Grant more, I guess, would say just at the macro level, looking at the entire economy, but also a deep understanding of how that actually ties into commodities specifically. And then Jamie, more looking at, you spend your entire life with kind of companies, mining companies, and exposed to that commodity side. I'm really curious to see how all this unfolds. What, like the point of the conversation being, the point of the conversation really being, what is the role that AI is going to play in kind of investing, macro investing, and also specifically down to the commodity sector. And we don't need to just talk about investment strategies. It's really what's going to happen operationally and what's going to happen within these companies. Grant, before we get into the details, maybe I think what we'll do is start with you. I'd love to hear your thoughts. Like, you spend your time, your life speaking, doing podcasts, interviews, just about the state of the economy. Where are things at? And if we can tie that in a little bit, so what does that mean? We're at a it seems like we're at a very interesting time in the commodity cycle as well. So maybe just get your observations to start, and we'll take it from there.
Sure. Yeah, we're in a really interesting place for so many different reasons, and that those interesting dynamics are pulling at us as investors from every possible angle. Obviously, a lot of focus is on November 5th and the US election coming up, and rightly so. You know, it's an important thing that is sucking up an awful lot of oxygen, an awful lot of political angst, and an awful lot of emotion on every side, and it's only going to get more climactic, I think, going into that event. And you know, the amazing thing is, if you look at the effect of changes in administration on the market, it's tough to see any kind of pattern. The markets tend to do what they do, and there's an awful lot of hand-wringing going into elections about this policy and that policy. But generally speaking, over the periods of either Democrat or Republican rule, over time they all kind of tend to even out. So this one feels a little bit more existential, but probably not for markets, I wouldn't think, if past is anything to go by. The economy, it's very difficult to get a read on the economy because it feels to a lot of people as though the economy is struggling. The numbers don't bear that out for the time being. And yet you have the Federal Reserve cutting rates and looking to cut rates more. So it's very difficult for any of us to really get a handle on what the reality is. And the reality might be somewhere in the middle of all of this. You know, the economy could be weak. They could be looking to cut rates. The data could be falling behind and not showing us what the real state of things on the ground are. But one thing that I think is important for people to understand, and it's a big change because we've lived in this kind of deflationary environment for 4 decades now. I think that's changed. I think we are in an inflationary environment now, and obviously that's going to feed into commodities, and we can talk about that shortly. But just that mindset shift of thinking that the problem we have to mitigate is suddenly inflation, not deflation, changes an awful lot of calculus for an awful lot of people. And so, you know, with that as a backdrop more than anything else, it does change the pattern for interest rates. It does change the calculus for what investments you want to own. It changes the calculus for whether you want to be risk on or risk off, and everything really needs to change. And we're kind of in this air pocket where we've had a couple of years of rising rates. It seems optically as though that panic has gone. You know, inflation's coming back to target. The Federal Reserve, while they haven't yet sounded the all clear, the noise is coming out of them, and there'll be more cuts to come. The danger is that those cuts are more because of an impending recession than the fact that the all clear is here. So the simple answer is there's a lot of confusion right now, and I think the AI component of that actually feeds in really well to this, because what we're all trying to do as investors is trying to find some degree of comfort and certainty in a very uncertain world. We're trying to make forward-looking predictions that are completely unknowable at the time, about the future path of either a given company's business or consumer behavior or the general economy at large, or more and more recently, geopolitical tides ebbing and flowing. And we're trying to make predictions based on levels of comfort we have in those. And AI, for me, as it's kind of swelled enormously over the last couple of years, we've all seen how quickly AI has become something you encounter everywhere. You know, we're about to talk about the AI in the commodity space. And I think for me, as I look at this, it's important to come from a place of accepting that I don't know what AI is going to do. I think anyone who's seen the first remnants of AI, which go back decades, this isn't a new phenomenon. It's just reached this critical mass now where it's happening really, really fast. If you'd have looked at AI a couple of years ago as a new phenomenon, you would have, thought, wow, this could be kind of cool. And we've seen it go from this could be kind of cool to this is going to permeate every single aspect of our lives in the space of a couple of years. And so anyone that has an idea of how that's going to look, I suspect is going to have that idea challenged over and over and over as this thing builds momentum. So that's when I look at AI, I recognize that it's going to be a factor in just about everything we do and every decision we make. But I think having any kind of certainty around those kind of decisions and what they're going to be risks you not leaving your mind open enough to accept the kind of pace of change we're going to see in AI and the different ways it's going to affect those decisions we make. So I think my basis for this conversation, and I'm fascinated to hear what my fellow panelists have to say about this, because I think they spend certainly everyone does spend more time on the actual AI itself than I do. But I'm curious as to understand how open-minded we need to be to accept that it's going to be a big factor, but we don't have any real understanding right now of A, just how big a factor it's going to be, and B, the different ways in which it's going to shape all our investment decisions.
I couldn't agree more with you on that one point about it's okay not to know. And we spend a lot of time in a traditional industry working with kind of here's an AI solution. And the number of times you kind of hear, well, AI only works in this scenario. And as you know, AI is this and this, and it's actually that we don't know. And even what we do know and we're sure on, the rate of change in AI is so insane that everything that we know to be true about AI today might not be true 3 months from now. Whereas in the past, that was a 10 or 15 year difference. So it was, you were comfortable to say, it can't do this, or the limitations are this. That rate of change plays into this as well. I couldn't agree with you more on that. I think people are coming around to it, but everyone needs their individual sort of aha moment with AI. For some, it's ChatGPT. For some, it's something completely different.
Well, and Steve and Grant, to piggyback off what Grant said, I don't think there's been an easier moment to reset culture, or perhaps a cheaper moment in the history of technology than now. And so if you're a CEO looking to reset the culture to be more focused on innovation and disruption and sort of good failure, AI is a perfect way of doing that right now from just a pure cost standpoint. It's not a billion-dollar integration. It is sometimes thousands of dollars to get folks onboarded and using these tools on a day-to-day basis. And I would say it is a fairly cheap way to push your organization to be more open-minded to some of these tools that can have pretty significant operational efficiency capabilities right off the bat. And so yes, we don't know what's going to happen in the future. There's multiple scenarios, but at the same time, we can become more open as a corporate culture to using the tools that we have today and having that more of an experimentation culture. And it's never been a better time to be able to do that.
Yeah.
And
I might piggyback on that too, is that what's interesting about it too, and it's just maybe where we are with AI now and where the technology is that I think that there's been this fear about it replacing jobs within industries. And what I see is that you need more skilled people, and you need the skill level to be higher, because you're working with a program that can interpret complicated data and put out nuanced responses. And you need to have a grasp of the subject area that you're looking at, such that you can call BS on the AI, because we all know from using ChatGPT and these other things that it's not always right, and it still puts out things that are wrong, but often then in other cases it puts things out that are very creatively right, and you need to be able to investigate that. And whether it's in geology or geophysics, you need to have a very high skill level and experience within that field to interpret what it's doing. And so I think it requires more training and people to be on top of their game to actually use the tool appropriately.
I agree. And Ashton, to your point, I think one of the fascinating things about it is we've actually been given a tool in itself that can help guide us through that process as well. Like typically it's really hard for a small company or a big company to either shift its culture or to implement something like, hey, we're going to now embrace technology, or we want to find out all the different ways that our business and our team and our investors might be able to benefit from us using it. You can literally type in ChatGPT, what is the best way that I can take advantage as a mineral exploration company, as a mining company, as whatever I do, give me a step-by-step plan and how I would implement that. And we've been doing some things like that at VRIFY, and it's you look at it and you kind of think like, how would this would take me probably a bunch of like 2 years ago, this would take me a bunch of consultants and a whole bunch of my time to do. And I think there's all these things that we've been trained to feel it's intimidating to implement change. And there's actually AI in itself is the tool to kind of break down that barrier as well. Which is really empowering as a leader in an organization. Once you kind of realize the number I've been told in recent days, primarily with technology people, that have you tried asking that question to ChatGPT? And I don't default think like that yet, but I'm starting to, and it's fascinating the insight that you get.
Well, and I think that comes back to the point of, OpenAI or ChatGPT or Copilot. It's just not for it's not only just for junior folks in terms of the tasks that they're doing. It has to be embedded in the workflows of what the senior executives are doing as well, so that they can start to instill that mentality around experimentation and using new technologies all the way down the organization. And again, I don't think there's been a better moment in time to be able to do that. And I also think as you think about implementation of some of these new AI technologies, and thinking's evolving in days here, not years, in terms of how quickly the technology is evolving. But I think if you went a year ago and asked people who were covering large tech, they would probably say, no one's going to impact Salesforce because they have distribution, they have customers, they're the incumbent in the space, and they may be able to innovate faster than some of these new startups. And now what you're seeing is CRM systems that are coming out. All they need access to is your email and a simple questionnaire, and they can be up and running in hours and implementing across your organization. Whereas historically, it would have taken millions of dollars of integrator costs to get those up and running. And that's a huge lift for an organization. And so just from that simple fact, these large incumbents may not be as safe as what we actually thought they were a year ago.
Yeah. Which is I'm the Salesforce one comes up a lot. Like if I can build a CRM in an hour and hire one person, like it's hard to justify millions and millions of dollars a year that I might pay them otherwise. I don't know what the mining industry equivalent of that is. Like the one thing about mining is they are physical assets. Ultimately, you do need kind of people. Maybe someday it's robots, but you do need kind of boots on the ground, people doing things, physical things. And I'm so curious to see, Jamie, I don't know if any of the conversations you're having with mining companies, which I'm sure are multiple times a day, if there are any trends, things that, whether it's exploration on the mining side, anything you're seeing that you think could, I would say, have pretty big impacts in the sector. Like right now, that the sector for the most part is benefiting from higher commodity prices, which is driving better margins. But what we're seeing in other sectors is sort of you're seeing margin expansion coming from the other side in AI efficiencies that are showing up as well.
Yeah, the commodity sector oftentimes in the age of AI and, and markets and quick trading and people looking just quarter to quarter, I mean, this is a very long-term industry. And I think that what is shaping the industry now is kind of still the end of the last super cycle. And we saw exploration spend peak in 2011, and it came down in real terms, or in real terms, it's continued to go down, but in nominal terms, I think we saw another, it went up a little bit in 2016 and then came down from there. And we haven't seen a recovery in exploration spending with the commodity runs that we've seen recently. And in nominal terms, you got to think that the spending is way down, because I mean, I look at like the drilling costs around the globe and it's super expensive. I mean, people are drilling in Nevada, and it's costing them $1,000 a meter. I mean, where I think that if you go back to, 2015, that would be like, $400 a meter, so you've seen, inflation and just a lack of money in the sector. And it was really driven by the fact that, after the commodity boom from 2000 to 2011, that these companies became over indebted, had made bad capital allocation, and resorted to having to clean up their balance sheets and return capital to shareholders, which is the right path to go on. But as a result of that, there is just less projects that are in the hopper for these companies to develop. And then in the same course of time that we've seen, the permitting timelines extend significantly, which has led to less projects coming online. So, I think that AI, will be a very powerful tool in merging a lot of the earth sciences that we have, so looking at geophysics, geochemistry, geology, remote sensing, and being able to integrate those and make much more rational decisions on where to drill and how to explore. I think that it'll make our exploration companies and the exploration divisions of the larger companies much more efficient in doing that, and will save them money and time. But that is just that's just the beginning of the steps that it takes to make a mine. And we might be more efficient at finding them, but then you have to take that discovery and take it into production. And we've seen that timeline grow and grow and grow. And the lack of spending that we've seen in the sector over the last decade is going to be with us for a while. AI is not going to fix that overnight. So I think that's kind of where we stand from an exploration perspective. And the other thing that's going on is that even though we've seen relatively strong commodity prices, we've seen the gold price run. I mean, copper was running, it's kind of sold off and come back with the Chinese reemergence. But there's no trickle down effect. So we've seen, some of the larger companies start to rally and they're generating cash, but there hasn't really been the trickle down effect where we've seen like the junior explorers receiving the capital, who are the ones doing the exploration. And so there's still this huge bifurcation in the market. And I think that will start to contract as more cash flow comes into the sector, and the larger miners need to deploy that cash, and maybe they don't have the projects within their own portfolio and they need to go out and get it. And maybe they look down market cap. And then also the debt markets are open to them as well, because the credit spreads within the miners now is pretty tight. I think that, some of them are trading like 75 basis points over, so it's very tight. And, the other thing that is not allowing capital to flow down to some of the more entrepreneurial companies that tend to drive new discoveries is that capital markets over the past decade have also become more concentrated and more passive. And so all the money has gone to the larger cap companies and within ETFs, and ETFs can't participate in private placements and allocating capital to smaller companies that are consumers of capital. And therefore, a lot of them have been left without sufficient capital to progress their business. So there's still a dearth of capital out there for exploration, And I think it will take higher commodity prices and significant cash being generated by the larger miners to change that. And from the AI perspective, I think it's really a great tool for everybody, but it's not going to change this dynamic overnight.
So I think the one thing where it has the potential to is if AI, so I'm a big believer in AI for mineral exploration as one example. If we start to see a wave of AI generated discoveries that are just using pre-existing data, so super efficient discoveries because they're quick and they're just using data that's already been collected. That in itself, if that starts to attract capital, it starts to spin that flywheel in that kind of the more capital that comes in, the more drilling's done, the more drilling that's done, the more discoveries are made, and so on. So I think it's not like the silver bullet in any of this, but I'm a big believer that ultimately, if we can, it's not even about making exploration more efficient. I guess it kind of is efficient. Efficient's not as exciting as just big new discoveries.
Yeah.
That's ultimately what we need. We all know that we've seen those stories when that happens, kind of you have to beat money away with a stick. The nice thing about that is if you have more capital, timelines start to shrink because you can build things the right way and so on. So that's sort of the AI.
I guess I'll caveat what I was saying and play off what you're saying is that in brownfields, in existing operations, the chances to bring on more ounces quickly where you're not dealing with this permitting and development timeline. Like, for example, I know that the Galena mine was unitized recently up in northern Idaho, and that mine's been, that's been mined for probably nearly 100 years, right? And so the amount of data that's there and the trouble, just the complication with trying to organize all that data and actually come up with some reasonable plan is very difficult, where I would see something like AI being very useful.
Yeah, and I think there's so many opportunities, and I'm sure Ashton has other examples as well, where it's just like taking data that we've just collected for years and years, and what we all, doesn't matter what the sector is, you have a tendency to just there's a bit of a recency bias where you just tend to think new data is better for making your decision. Where like mining for one, sometimes you have hundreds of years of data that could be used in those decisions.
Well, Steve, Jamie, it almost sounds like what you're saying is if predictive capabilities become so good with some of these models and applications, does every mining company, even those that don't want to do exploration, all of a sudden become exploration companies?
There's higher returns to exploration. Yeah. Yeah, because the one thing that I say to a lot of people is that, mining gets a bad rap because of, the legacy of environmental issues and people not wanting in their backyard. But I'm like, the globe should be, praising the junior mining industry, because I think on net over history, it's probably lost money and provided cheap commodities to the world, right? Like they need to become more efficient with this, and they can, actually have positive returns in exploration and not, one discovery for every like 10,000 drill holes. It's like, that would be great. And you're probably right. It will make that much more efficient and more of a business proposition around it.
And
Steve,
I
just follow up one thing. In terms of those of us that are outside the AI world trying to understand its impact and figure out what it's going to do, the Salesforce example is a perfect one, because I think all of us, our first exposure to this through ChatGPT was, writing song lyrics in the style of this guy and that guy and all the crazy things that we could do to play around with ChatGPT. And I don't think the first time, I was looking to write an Eminem rap song about an English football team, I would have thought that this thing was going to disrupt Salesforce within a year.
Yeah.
And that's how we all need to think about this, because it might be difficult to think about the concrete ways in which AI can disrupt the mining industry. We've had some great examples here, but your mind has to be open to the fact that the applications for this run on data. As you guys have pointed out, there's an enormous amount of data going back years, which is perfect fuel for AI. And so you just have to have an open mind and realize that even if you can't figure out how, you can guarantee that AI is going to disrupt the commodity sector. There's no two ways about that. We just have to be open-minded and watch that journey and try and stay current with it to see where the puck is going, to use it one Ashton understand. and be as up with it as we can to try and guess the very next iteration. If you try and guess 5 down the pipe, you've got no chance of figuring it out, but you can stay as close to it as you can.
It's well, another fascinating part of all this is that sort of, we've seen that level of progress. I don't know how far are we into this since the ChatGPT was first released? Are
2
we a year and
years,
a half?
maybe?
A year and a half
Yeah, a year and a
now?
half, 2 years. Yeah.
If you look at the amount of time and energy that's being put into these data centers now, to a point where, like, I never thought we'd see this moment where, and it's actually the tech sector and the mining sector have never been closer together, because you have technology companies buying nuclear power plants
Right.
and having a direct impact on the price of uranium. And there's private technology exploration companies that are raising hundreds of millions of dollars now, and kind of on a big part of the thesis is the amount of copper that's going to be needed to for the compute power that all these computers are going to need to do it. I guess what I'm saying with all of this, though, is like the rate of change is only going to accelerate from here. So to your point, like, you're right. I actually did that exact thing. I rewrote a song using an early version of ChatGPT. And there's no part of me, if we actually take ourselves and put ourselves back in our shoes at that point, we were not thinking about this level of disruption we're seeing now.
No.
And we're a year, 18 months from that point, and it's only about to accelerate from here. Yeah, it's gonna be fascinating. I think the most important thing in all of this is ultimately just keeping an open mind towards it, to your first point, Grant.
Absolutely. Yeah, absolutely. I think that's so crucial for all of us, because we're not in the trenches. We don't see the advancements that are being made. They get rolled out to us, eventually, basically.
Yeah.
And I know it's an arms race, and I know they're all moving quickly, but we have no idea what's happening inside these companies and the things that they're experimenting with now. And we're going to be exposed to all of them in time, but it's going to happen at a rate that is very difficult for us as human beings, never mind as mining investors. It's going to happen at a pace that's very difficult for us to handle and understand and deal with.
Yeah.
The benefit being we now have AI agents we can ask.
Exactly.
Hey, what do I need to be watching for over the next 12 months that could impact our industry? Ashton, go ahead.
I was just going to say it's easy to sometimes dismiss rate of change in these technologies, and that it's a hype cycle. And I think if we were 3 years ago or looking 2 years ago, NFTs, maybe we would be right. I think with AI and some of the business models that are being built overnight, if you take, for instance, Anthropic, and this is public information, it's, 0 to 60 million in revenue in 8 months, and it's going to 1 billion in revenue by the end of this year. And you look at OpenAI, it's 150 billion valuation, and you think that's crazy on the surface of it, but that business is supposed to generate, over 20 billion of revenue next year. And like, this is public information. And so the growth rates of these massive businesses that are basically doubling every single year is just staggering. And so it's just something that you can't really dismiss if you're an investor in the space, or if you're a CEO, whether you're in mining or whether you're in technology or whether you're in healthcare. It's something that you need to embrace and you need to be watching.
I think another dynamic too is in the mining sector, everything's public. These are 90% of these companies are public companies. And I would say, JB, you probably know this number better than me. 90+% are not cash flow positive if we put mineral exploration and mining together. Probably more than that. So you're entirely reliant on continuous capital, and sort of the dilution you need to take to raise that money is subject to whatever your share price is at on any given day. So ultimately, I think, kind of to your point, Ashton, if it's not just about knowing how to sort of stay at the front of this and understand the implications of your business, if you're in a market where investors are actually demanding it and ultimately rewarding you for using it, I think you're going to see every single CEO and every single executive ensure that they're able to speak intelligently about how they're using AI in every single part of their business, not just exploration, but literally, like we had someone on our marketing team built a tool that you can now just put your press release data into, and it spits out, it uses all of your previous press releases and writes the entire press release, but you can modify the tone. So you take technical data, put it in, and it spits it out. That's not a mineral exploration AI tool, but it's a super useful tool. And the press releases that I've seen it generate so far are just head and shoulders above kind of the ones that came before it. The fascinating part is this took them about 20 minutes to create this tool. Like these are the type of things. And I do think you're going to see investors just start to say, like, explain to me how you are getting the most out of AI to make your business better and whatever, whether it's exploration, mining, at a corporate level, and everything else. Maybe Grant, I love your comments on like gold has traditionally been a hedge against uncertainty. We're seeing gold hit all-time highs every day right now, which is fascinating to see. I feel like those of us who are kind of involved in the gold sector have just been kicked on time and time again for the last 10, 12, 15 years, as long as I can remember anyway. Do you think that there's an element of, does this rise of AI create new risks or opportunities? And do you think that there is any correlation if gold is tied to uncertainty into the market? Do you think some of that is a play on AI, or do you think we're just kind of putting two different, essentially big trends together in that?
Yeah, I don't think gold is reacting to AI. I don't think that's a part of it. I think it's reacting to just about everything but AI. But I just don't see that. As I said, AI is such a difficult thing for us to conceptualize in the main, and I don't think gold is reacting to. I think gold is it's acting to in response to all the things we expect, inflation, high debt levels, currency debasement, all those things. But I think most importantly, it is, and I've written about this extensively, that the main factor here was that freezing of Russian central bank assets. I think that has been the difference maker. That's been the game changer, because you suddenly have all these central banks in the world, basically anyone that holds dollars in reserves, which is everybody to some extent, now has to have a plan B, because it's been proven that there are circumstances under which your reserves can be confiscated. And that, I think, if you look at the average purchase from central banks in a quarter, it was like 118 tons before the Treasury froze those Russian central bank assets. And it's almost tripled quarterly past that over the last 2 years. So there's a definite need to own gold. And commodities, ultimately, we talk about inflation, we talk about deflation. People spend a lot of time on stocks and bonds, and they are really instruments of fear and greed. Stocks and bonds, particularly. Commodities are instruments of need. You need commodities. You need those raw materials to build anything, no matter what it is. There are commodities at the base of that, and so society can expand without AI, as it's proven for many, many years. It can't expand without commodities. So having an asset that is a need-based asset at a time like this, given what's happening in the world, given the fact that inflation seemingly is really baked in the cake at this point, we're trying to fend it off rather than create it, which we've been doing supposedly for 15 years at the central bank level. Having a need-based asset at that point in time is a really good thing to own. So I think, given how cheap commodities are relative to other kinds of financial assets, given the complete lack of interest in them from most people outside the commodity space, and given the economic macro backdrop that we've talked about at the beginning here, it's never going to be a straight line, because it never is with commodities, and they respond to the cycles that are at play elsewhere. But you haven't had as solid a backdrop to own a need-based asset as you have right now for quite some considerable time. So I don't think gold is I don't think there's a dollar in the gold price that's AI related. I genuinely don't. But I think the reasons for the rise in price and all the various decouplings that gold has done over the last couple of years with other assets that it tends to move inversely with are speaking volumes about what the likely future is going to be, particularly for gold, and I think commodities will go along with it.
Yeah, I can just comment on what I see on the equity side of that, and we've seen strong increases in the gold and silver price, and I guess earlier this year copper price, but that has not flowed through into the equities yet at all. I mean,
Yeah.
they have underperformed, the equities have underperformed the commodities pretty drastically over the last like 2 years. And I just think that, again, I have to go back to history and look at what happened in 2020, and investors piled in to gold in 2020 into the equities, and then they experienced the most astronomical inflation within the gold sector from the operating costs that's ever been seen, and there was no margins generated. So, I mean, I don't think investors are going to come back to the sector until they are seriously putting cash on the balance sheet and showing that they can deliver margins. You know, and then also the copper sector was a little bit different. I think we did see a lot of interest in the copper sector, and it really was a follow-on of AI investment. I think it was part of the thematic of the energy build out and the amount of energy required by AIs and building out the data centers. And we saw that spike. And, you know, there were fundamental investors, generalists going into the copper companies, but we didn't see that in the precious metals at all. So different dynamic.
So since we have a non-commodities investor on the call, let's ask them the question. Ashton, and I don't mean this from BCI, I just put your just technology investor hat on. Like, obviously mining is not I would say an exponential business like technology and SaaS can be. But is there a scenario where, I don't know if it's uranium because of the tech companies buying nuclear power plants, or if it's copper because of the build out associated with AI compute, is there a scenario you think where technology investors actually start to pay attention, whether it's kind of mining companies, mineral exploration companies, mining adjacent, which we're starting to see a little bit of? Do you think it's realistic to think that a technology investor, that your typical technology investor, would actually start looking at the sector?
Yeah, I think you're already starting to see that. I mean, if you look at some of the investors who've gone into, you know, AI mining companies like Cobalt, they were traditionally not playing in that sector. And so you're seeing a recognition by technology investors, and especially the hyperscalers, that they need to secure the supply chain around data centers and energy consumption, especially for these large AI models that are just incredibly consumptive. And so, I see technology investors starting to recognize that they need to at least understand the market a little bit more. And then as you think about vertical software, I mean, there's potentially huge implications in the mining sector. And there's companies that I think are going to be built that are just focused on the mining space and solving these specific problem sets that the CEOs and mining companies are facing. And, you know, obviously what you're doing in terms of VRIFY and Cobalt and others are trying to solve these specific use cases where historically it's been a challenge to find mineral deposits. And if they can solve those, I mean, you're going to see technology investors start to flood in even more to some of these software opportunities. But I don't think you're going to see technology investors go into hard assets. I think they've historically always wanted to be asset light. And so if you're a software layer or AI native focused on that specific end market, I think you'll find a lot of interest. I just think if you're, you know, if you're owning the hard assets, I think that's just a different proposition.
Yeah, that's one that it's sort of I'm curious to see play out. Like, one of the toughest parts about mineral exploration in general, it's pretty unquantifiable, right? Like you sort of have a geological thesis that we should drill this thing and hopefully find some stuff, but it's really hard to quantify, like, what is the risk reward, what is the sort of return profile if I do, because you don't know if you're finding something small or big, or if it'll make economic sense or not. And what we've seen is AI it's not only about making exploration, I'll use exploration as an example, it's not only about making it more efficient, it's also about quantifying the risk. In that sort of all of this data says that this area has X% chance with a variance of Y. And I'm so curious to see if, like, maybe it's not the technology investor, but the non-typical mining investor, someone who doesn't look at the sector because they don't understand geology or can't, like, it's really hard to invest in a sector where you can't quantify risk return. If we could actually, if we can quantify the risk return profile of something like mineral exploration, for example, if there's a chance that they'll actually start coming in. I think that's what we're going to do our best to see kind of play out over the next year or two, as we start to use some of these tools and see the impact that they have in our business. Ashton, any other, we might jump to a couple questions here, but just any other, I find these, like whether it's the Salesforce or these anecdotes, or I find them fascinating just to hear about how AI is disrupting other ways, because I often find when I hear these stories, I never would have thought it could have done that. Anything else you're seeing in the companies that you meet with, like unexpected, whether consequences or benefits of AI in what you're seeing today?
Well, I think the big release that we're seeing is traditionally software has been, access to the cloud, and it's been a cloud providing service, and we've seen that shift over time. I think what's happening now is it's service as a software, and so it's looking at the service market, and it's looking at jobs to do, and it's disrupting those jobs to do. And so the primary example I think that most people on the call would know is, Klarna using OpenAI and automating their customer service agents, their tier 1 customer service agents, and they're saving millions of dollars through that automation process, and they're actually getting better customer experiences. That's the huge part in terms of, customer surveys are showing that it's improving the customer experience, which is huge. And then if, there's a significant issue, it can get elevated to a human. But really, there's not necessarily a human in the loop. I think there's applications coming down the road where you're going to automate that whole process, and there won't actually be a human in the loop. But I think we're getting there. I do see some really interesting implications around just asset management and investing, which is our sort of day-to-day business. There's this whole world where investors, and it's called the secondary market, where you go and you buy, funds, and you buy companies off of other general partners or private equity firms. And typically that is a very rigorous process, because you might be buying one of these funds and it might have 30 or 40 different companies in there. And you literally need to price every individual asset. And that's a pretty complex model. And then you have to bring it all together and run a huge model on top of that. And historically, that has taken, 6 weeks, maybe 7 weeks of, 8 to 10 investment professionals. Now what you're seeing is, models being built in days, not weeks. And you're seeing insights that analysts and associates at some of these large firms weren't able to have before. And so it's not necessarily just automating some of these processes. What we're seeing is, yes, there's speed. And so, this particular firm that's doing it, they may be able to look at 15 to 20 more deals on an annual basis and price them. And that's a huge shift in their business. But what you're also seeing is just insights coming from the model, looking at different probabilistic outcomes, scoring them, and then coming back with the most likely outcome. And that's an insight that you're not necessarily going to get through the old world analysis of putting together those models individually, and an analyst, working 12 hours a day doing it. And then you can do PhD level analysis, which I think, the implication is pretty significant on asset managers in the secondary market. And that's coming across the industry. So that's super exciting for me.
I think the mining industry example of that might be feasibility studies, or mine plans, where you take sort of all of the drill data that was done over years, you turn that into a resource model, and then you build an engineering study. But it's sort of like there's a 6 to 18 month lag time for each of these things. And ultimately you end up with a 500-page PDF document that here's how you should build. It's like a construction plan, essentially. Whereas what might be now is that sort of a living, breathing entity where every time a new data point comes in, it's adjusting itself on a minute-by-minute basis to tell you here's the best possible way to build it. It's not how we're all trained. We're trained to kind of put all of our time and energy and put a big stamp on something when it's done. But to your point, like the level of insight you can have if you're using real-time data versus 2-year-old data, it's very, very different. Yeah, it'll be fascinating to see if some of that plays out. Grant, one last question for you, and maybe we'll jump over to there's a couple of questions from the audience. You in a lot of the interviews and you talk a lot about cycles and kind of the just cycles in the economy and so on. Just based on this conversation around AI and rate of change, do you think that the cycle model, loosely defined, still applies, or do you think we need to completely rethink what a cycle actually is if the rate of change of something that's as influential and impactful as AI is changing a lot quicker than we've ever dealt with in history before?
Well, and it's a great question, but I would say that you know, there's all kinds of different cycles that overlap and intertwine, and you know, different people like to focus on different ones, but there are these big overall super cycles that Jane mentioned a little bit earlier on, commodity super cycle being one that probably we're all most interested in. But if you think about the rate of technological advancement through human history, you know, with the combustion engine and the airplane, and we've seen these massive leap forwards in technology that really change the game. The cycles tend, if they do vary, they vary. The big cycles vary in little ways. So I'm not saying we don't have to recalibrate some of these cycles given AI. I'm saying it's too early to tell, and you won't really understand the change that AI is making to these cycles until they kind of continue to play out. I mean, we're at a real convergence point here with numerous big cycles. You know, whether it's the fourth turning, Kondratiev waves. There's a whole bunch of war cycles. There's a whole bunch of cycles that are kind of coming to a head in the next sort of 7 to 8 years. If anything, one would imagine that AI would shorten the cycles and bring those climaxes closer. But I think it's too early to say how AI will impact the very big long cycles, other than, say, looking backwards and seeing that we've seen a huge technological change and it hasn't really altered them that much.
I agree with you on that. Do a couple quick questions that have come through. And first, is it, and Jamie, maybe I'll throw this one to you. Is it feasible to expect that AI will reduce or replace the need to actually drill thousands of feet of holes to find things, given that history shows that until you actually drill, you really have little idea exactly what you might find?
Well, I think it will increase the efficiency of doing that. I think that you will be able to put all those geotechnical layers together and pinpoint areas that have the highest probability of hitting, and maybe you hit faster than you would have otherwise. But then I think actually drilling out the reserve and the resource, there's probably a statistical puzzle there that's very hard to figure out, where you could optimize the drilling out of the resource to make it more efficient, so you're not drilling as many holes.
Or in some cases, you might actually be drilling more. It's one thing I'll just add to that too is I think that it kind of goes along the lines of, like, is AI going to replace us? Do we need less geologists? I think if AI actually works to help find things, more capital comes into the sector. You probably end up drilling more. Even though your discovery rate is higher, it just means you're discovering more things, and you probably need more geologists and more people, because the overall kind of exploration budgets are going to be so much bigger if it proves to actually work.
Yeah, I think we were talking about this yesterday, and I think it's analogous to that Centaur chess, where you have the chess players that are playing with a chess engine, and the chess engine can beat any one player, but a really good player playing with a chess engine can beat the best chess engines. You know, so it's like, you know, you put, and it becomes more important, I think, with AI, because there's so much uncertainty. Obviously, chess is a very contained, quantifiable domain that you're exploring, where geology is unbelievably complicated, right? And so, like, it will help steer you in the direction, but you really need the litmus test of someone who knows what they're doing, and you know, to oversee this and understand why it's thinking what it's thinking and why it might be wrong. I mean, you look at Cobalt, they brought in David Broughton, who you know, he's like the expert on, you know, he's done more sediment hosted copper work than anybody in the world, and they have him, you know, working on that on their what is it, Zambian project. So yeah, that's
Okay, it's coming up on the hour here. Last question. It's a one-word question from each of you. What commodity performs best post US election? I'm gonna write these down and there'll be a prize going to the winner as well. Ashton, you're up first.
Oh, I don't even have time to type it into ChatGPT. I'm gonna go.
Jamie and I do though.
Yeah, I'm gonna go with gold.
Jamie.
No, I'm going silver.
Okay, and Grant.
Well, come on, that's not fair. You've been the third
Yeah.
guy to go after that. It's one of those two. I put it this way: if I gave a presentation about being an investor or a speculator, if I was an investor, it'd be gold. If I was a speculator, it'd be silver. How's that?
Cool. Covering all your bets. Love it. Guys, really appreciate it. Fascinating to just get the different types of insight into all this. It's I think, Grant, one of my biggest takeaways in all of this is to your point right off the bat. We don't know what we don't know, and we sort of have to embrace the unknown. It's going to be chaotic and creative and everything. I think, like, one of the questions I had that I didn't ask is what does all this look like 10 years from now? And I think we're probably all on the same page in that we have no idea. Like,
No clue.
what are these mining? No clue at all, and that's okay. I think ultimately it's going to come down to what companies, investors, whether you're on the investor side or the corporate side, who can react the quickest to the newest information possible. Because ChatGPT, like I started to use it more. The version now versus 3 months ago is completely different, and you almost have to relearn everything and what you can ask it now versus a couple months ago. So appreciate that. Appreciate all three of you taking the time. And thanks to Jessica and Misha as well. We'll cut it at that, and we'll shoot this out and via social and everything else. But thanks again, and thanks to everybody
Great
for
pleasure.
tuning in.
Good to be with you guys.
Awesome.
All
Thank you.
right, see you guys. Have a good one.
Take care. Bye bye.
See you guys.